Hey everyone, this is Ed Keim, CEO over at Quantcha, and in this video we're going to take a look at some of the news and updates that have gone on over the past week over here at Quantcha. This is the second video in a regular series that we're doing to provide more transparency into the development and the availability of features from Quantcha. First thing we're going to talk about here are some Quantcha improvements in the options search engine we've got on our website. There are two major things that kind of came out this week. The first one is an at-the-money implied volatility surface model that we're showing for all the stocks that are available that trade options that we support. And the second thing is related to that, the correlation data for any of the stocks that we support with any of the other stocks we support. And so I'm going to hop out real quick and head over to the option search engine here. We're on the landing page where we get to select the stock. We're going to start off with Microsoft. It could be any stock, but we're just going to pick them. And I've selected the expiration, which is a pretty standard feature. And now, or rather, I've selected the stock and we're on the select expiration page. And before it used to just be the select expiration and this quote and company view. But now we've also got this chart over here, which is the at the money implied volatilities for future terms. And we've got 10, 20, 30, 60, 90, 120, 150, and 180 days. And so you can see, for example, here, Microsoft's implied volatility is currently about 19 and a half or so at the 20-day, or this is the 10-day mark rather. At the 20-day mark from today, it looks to be about 20%. It goes up to about 25 at the 30-day mark, and then kind of slopes its way back down to really about 20 and a half. Now, the reason for the spike, as you might imagine, is a big event that happens between the 20 and 30-day periods that we've got support for here, which is, in this case, earnings. You can see that they announce earnings on April 23rd after market close, and today is the March 29th. And so really that accounts for the spike that's there. So if you are planning some calendar trading, or if you're looking at times when you want to be aware of some of the volatility that's going on with the stock, this is a really quick and easy way to do it. If we switch around to other stocks, you can kind of see just the view. Like Apple, for example, you can see they announce around the same time on the 22nd. But if we go back to Microsoft, take a look here. Another useful thing is we've got this correlation support, and correlation is basically we analyze the trading history of stocks compared to each other, specifically looking at the returns that they've had over these various durations, whether it's 30, 60, or 90 calendar days. And then when the correlation is calculated, it's a number between -1 and +1. And the closer you are to +1, that means the more closely correlated the stock that you're looking at is with the stock that's listed. So in this case, we can see that Microsoft is pretty closely correlated with Gladstone Commercial over this 30-day period. On the other end of the spectrum, you've got negative correlations, which tell you, if we look at these are all pretty much ETFs. But you can see, like, for example, this Direction Daily Technology Bear Fund. This guy here is negative 0.71, which means it's pretty highly negatively correlated with Microsoft. So on the days when Microsoft went up over this 30-day period, Gladstone was likely to go up, and the Direction Daily Technology Bear was likely to go down, which is really no surprise there for a tech bear fund. But you can also easily sort by the 60-day and sort by 90-day, and you can see all the different ones. And it's in this case, it looks like, typically 30, 60, and 90, you'll have a pretty common correlation. But you see it does change. So, for example, at 30-day, we see Gladstone up here. But then if you look over the 60-day period, Gladstone's not on there. So if you had two charts side by side, you'd see a lot of correlated trading between these two over the 30-day period. But then over 60, it looks like there wouldn't be much at all after that 30-day history. And so this is kind of cool because maybe you're looking at trading a stock, like maybe you're interested in Microsoft, but you're saying, you know what, for whatever reason, I'm already too invested in Microsoft, but I still think it's moving up, and I want to, for whatever reason, I want to trade a different stock, but I'd like it to have the advantages. At that point, you can go over and take a look at Xerox. And a good example here is if we look at Xerox, or rather we look at Microsoft, there might be volatility here that you're just a little bit worried about. And so you might not want to trade that period of time, but you might look for something that doesn't have the same spike in volatility. So maybe, if Travelzoo has a different, well, not a great example, but you get the point. And then what's kind of cool as well is with the negative correlations is that if you are trading something like, let's say we take Xerox. Now, in looking at Xerox, we might, or even let's try to find something else here. Autodesk is a good example. You might be heavily invested in Autodesk as it is, and so you might be looking to trade something in here, such as Weight Watchers or StarTech or whatever, because they're negatively correlated, and therefore you're kind of hedging against the position you have. And this provides just an easy way to kind of get in there and take a look at how that stuff works. Another thing we're going to talk about in this update is our Quantcha Ideas website. And this is a site that we have where we publish trade ideas on trading days. Some of the ideas we post are created by a staff writer, where they go out and they look at some of the news and say, if you believe in this news article or the opinion expressed in the news article on a third party site, here's a good way to trade it. Where, if someone is bullish on a stock, or if they put out a one-off price target, we'll say, if you believe into that investment thesis, then here's a trade for it that could work. And in these cases, like everything we're doing is using third-party data. I mean, we don't create opinions ourselves. We're just relying on helping people analyze the data that's out there and helping them express views on those stocks. Now, we have scanners as well, which are automated scanners that we're working on, and we're bringing more online. For the past couple months, we've been kind of beta testing a covered call scanner and a synthetic long scanner, and I'll cover those in 1 second. But this week, we're pretty excited. We just launched a price target scanner that uses the Zacks consensus price target and helps you express a view using options based on the price target that's being expressed. So I'm going to pop over real quick and pull out the covered call idea. Here's an example of a covered call idea that was detected on March 26th for LRR Energy. And you can see, if you come out to the site, and you can also find all this, we syndicate all the ideas out to Facebook and Twitter and StockTwits, and so they get shared around the internet, and you might come across a link. There's kind of a couple key things here. There's the body of the article, which is in the middle, which explains the statistics and the thesis behind the trading and some of the other things you'll want to know. And then on the right side, we've got a little plugin here, which is to customize the idea. And this idea reflects the idea we were talking about. All the content that exists inside the body of the article itself is hard-coded to the time it was created, of course. It's not updated once it's published, and you can see when it's published. You can see the date at the top, but at the bottom will actually tell you the specific time the analysis was run. In this case, it was on that Thursday at 1:09 p.m. Eastern Time. And the idea here, talking through this covered call, that's when you buy a stock and then sell a call, and depending on the nature of the trade you're looking at, the call could be at the money, in the money, or out of the money. In this case, the stock was trading at around $6.66, and an opportunity was seen for options that were trading at, or if the options struck at 5. And so in this case, those options were about 25% in the money, which means they were pretty likely to be executed. In this case, there was that execution happening at about a little over 51% likelihood that they'd be exercised before or at expiration. Now, a key thing to also notice is that with stocks like this, for example, that 50% is indicative that the stock is almost surely giving out a dividend before then that would lower the value or lower the price of the stock in order to make that strike. Because usually when you're 25% in the money, you're almost guaranteed to be exercised at or before expiration. Stepping out and kind of switching over now, we're going to take a look at the another scanner that we support, which is the synthetic long. And the synthetic long concept is actually pretty straightforward. What you're doing is you're opening a long position synthetically. So you're buying a call and you're selling a put. And what happens is when you have that position, this P&L chart represents a long position in the stock. Only the difference in this particular case is basically that the break even for the stock price from where you are now is usually significantly below where the stock is trading at. And so in this case, for a given one, will tell you what the discount is versus where the stock is trading, give you some basic analysis. And I should have also mentioned that on the right side, we've got this panel that enables you to customize. So if you see this particular thing, if you see a trade and you're interested in it, you can come in here and actually customize. So for this Angie's List idea, you might look at it and say, okay, I'm happy with it as is, but one thing I want to change is, use my E-Trade account or, my Fidelity account and apply it so that if I'm going to use this position, if I'm going to make this trade, give me some real bottom line numbers and update the chart to match exactly what I'm looking for here. And so that's another idea. And the last scanner we have, which is new, is the price target alert. And this is where we get notified from Zacks that their consensus price target has changed. We explain kind of where the stock is at and what the trade looks like, and then we say, in this case, Zacks updated Pfizer's price target. The consensus is 35.45, and there's some analysts and there's a mean recommendation of buy here. And then the approach that we have here is, based on the nature of how close we are to this price target being where the stock is trading at right now, we kind of look at that. We look at the implied volatility. When you're looking at an implied volatility of almost 17% and the annualized move that they're looking at is about under 6%, then we recommended a neutral range bound strategy to express this view. And then you can come over here and customize the idea if you want, but it's just a real easy way to get some cool ideas for trading stock. And so we're going to keep going with these videos. Some of the feedback has been great so far. If you've got questions or if you're looking for tips and tricks or anything like that, please feel free to send it in. The site is hello@quantcha.com. Thank you very much, and happy trading.